Hey there everyone, so in this video I'm going to show you a little bit about X36 and how I'm going to be using this on a real broker account to substitute the prop firm earnings. Now X36 has been specifically designed for prop firms, and the main reason is because of the ability to adjust the risk in such a variable manner, and we're going to see a little bit more about that in this video. In this example I'm going to show you how typical algorithms are working and those kind of results, and where you're seeing a return of something like 10%, but you're risking almost like 30% to making that 10%. And that's very typical of trade robots out in the current market. You'll see high levels of drawdown and you'll see low levels of return. And you can see that from the balance sheet. And we'll see examples of that in this video as well. Now, on the left-hand side, we can see we've got two little notes, one next to each other. On the left-hand side, we've got on this strategy, we're going to be using a $3,000 real broker account on a leverage of 1 to 500. Now, initially, just purely because of the data on the robots out there, I've set a max loss of 24%, which is a $720 loss, with a 8% monthly return of, and in dollar value it's $240. So that gives us a 3-month recovery period if we hit that loss. So our daily targets, what we're setting on the robot, is $20 per day, which is $60 per week. And if we hit a loss, we're waiting 1 week to recover. So that's the strategy in terms of the recovery factor and in terms of those numbers and what we need to make, regardless of what the strategy is. So at this point, I don't even want to touch the strategy, because we can turn losing strategies into positive strategies just by following certain requirements, just like I have here. Then I've done another test, and I decided can I improve on this and not have a monthly return of 8% with a maximum of 24, because that means I need 3 months of recovery. So I was aiming for a 1.5 month recovery period. And let's go through those numbers. Again, 3,000 deposit on 1 to 500 leverage. We're using a 8% max loss, which is $360 loss. And we're aiming for a 12% monthly return, which is incredible. That's a $328 return per month. And the reason why I decided to increase this is if you have a high win rate algorithm, you want to try and capitalize on those losses. So when you do hit a loss, your recovery is much quicker. And so the way to subsidize those losses is to make a lot more and keeping that loss to a minimum, because a lot of these algorithms currently, you're seeing lots of drawdown and it takes you a long time to recover. And if you hit another drawdown and another loss, you're in a very difficult situation. So in this example, I want to keep my maximum loss to almost half of what my monthly returns are. So you can see there's a 1.5 month recovery period. And the way that I did that was increase the dollars per day on how much I'm making per day, and increase what it is at the end of the week. And I still kept the maximum reset. So let's look at the first. I'm just going to move this out of the way. And after I performed those tests, this is the equity curve that we had on that test, right? We can see we had a really good progress. I'm just going to move. We had fantastic progress at the beginning of the year, last year. And we saw a equity hit, but we managed to recover that. And that's really, that's great to see, because we never hit a stop loss. So we have a very high success or winning strategy. And that's why we so have the ability to pass these prop firm tests, because our win rate is so high. So why not take this to real accounts? So then I thought, if we reduce this by half, we can subsequently, if we reduce this by half, we have a much better equity curve and we hit a higher return rate, because here we just hit $4,000 for the year, actually year and 3 months. So let's bring this back. So here's our secondary note. So I'm just going to move this out of the way, and I'm going to move this, because this is a screenshot from the previous, out of the way. And here are the results with these adjustments by just increasing this for an extra $10 a day. We can see we had half of that loss, and we ended up in the year of just above $1,500 net profit with one loss, which is amazing, absolutely incredible. So if we look at the optimization backtest results, here's the most interesting part. If we look at the total net profit, actually, let's look at the gross profit, which is $2,100, against the gross loss. We can see the gross loss is just under $600. Usually typical, if you make $2,000, you're going to see a $4,000 gross loss. Especially on grid martingale hedge EAs, you're going to see a greater loss with the recovery factor covering those. So you could potentially make $10,000, but your net profit is going to be like $1,000. And this is really good to see, because you're seeing a really positive return. So if you look at the expected payoff and the Sharpe ratio, that's why we've got them so high at above 10, which is fantastic. And our profit factor is 3.56. And the recovery factor, we're just under 2, which is really, really good to see. So, and then you can see our equity drawdown, we can see at 21%. So if we have a look at the notes again and just verify that with the notes, at monthly return, max loss is 8%, and we've got 20 maximum. That's the overall max loss. So we can see that the overall max drawdown for that period was 21%. So in hindsight, we've got a very positive return. If we look down at the profit and losses per month, we see we're consistently making more profits than losing trades per month. There was only one in June where we actually hit that stop loss. We can see there $380. And we can see roughly, if this is 190, we're making about, what was that? About 150 a month on average. But this is these extra little bonuses that really help. And the main reason why we're able to do this, if we look at the inputs, we can hit our daily goals, our weekly goals, and we also have equity protections for weekly protections. And we can configure this to when we want to restart that as well. So it's highly customizable in what we're doing. So this is why now it's a fantastic opportunity actually to use this on real broker accounts, because our monthly profits are exceeding our losses. So I hope this has been really educational video to see the potential of using X36 purely because of those inputs and looking at what we're doing here. So I will be taking this to a real broker account, and once I've fine-tuned these strategies, I ideally want to look for something potentially, if I can have a continuous upward curve, protecting as much losses as possible, then that's absolutely ideal position. So hope you found this very useful, and I'll speak to you all in the Telegram or Discord community. Have a great weekend.